Alrighty, what's up, everybody? Good morning to you all. Glad to have you guys in here. My name is Sal, and we got Cody here. We're in for another episode 35 of Market Morning News and Chat. So, good morning. How you doing, Cody? Think he's there. We go. So in here, but before we get into the basics, there, guys. I'm sorry, I'm just setting up some stuff. Glad to have you folks in here. If you guys can hit that like and subscribe button, it really helps. It helps us grow. We really appreciate it. We are live on YouTube, Twitter, Twitch, and Facebook. So definitely join in and shout out your questions and comments in the chat. I don't know if we'll have time for an open session with you guys, but we're definitely glad to have you guys in here. Going over some of the basics. There's a little bit of news to cover too, especially changes in how taxes might be done on your crypto holdings. But let's get into some of the just the morning basics here. We have the greed and fear index for crypto at 82. We have the market cap at 2.52 trillion. It's up about 5% from yesterday. Trading volume at 145 billion, and we also have Bitcoin dominance at 51.9% and Ethereum at 16.7%. Bitcoin staying in the 60,000 range, kind of hovering between 63 and 67. Right now, about 3.5% up on the day. We have Solana about 7.5% up. We have XRP up 10% on the day, almost 11% on the day at 65 cents. We have Polkadot at up about 2% at a little over $9. We have Chainlink up about 5.5% from the dip that happened last night. We have Litecoin recovering nicely, 6.5% up. And of course, we have scrolling down to good old Quant, still holding that 125 range, but it's up 13.5% from yesterday. So everything's starting to recover from the dips that we had yesterday. So it's you're looking at
that's how it's going to be in a bull run.
So
it's how it's going to be in a bull run. It's like people think.
Mm-hmm. No, go ahead, Cody. I'm sorry.
Oh, my bad. I'm like, in a bull run, it's like everybody thinks it's just straight up. It's not like that in a bull run. We have situations like this to where we get flash crashes. That's what I call this, a flash crash. It's like
it was like
you can say that's manipulation.
Mm-hmm.
You could say it's manipulation. I guess a lot of big players are wanting to shake retail out, but that's why DCAing is just always the way. I know that sounds boring, but people want to pick and choose. Oh, I want to get in at the bottom and sell at the top. That's not your goal in investing. That should not be your goal, buying the bottom and selling the top.
Yes. Then you're really just trying to do the best that you can. And to me, it's just an opportunity to dollar cost average in because we're nowhere near where the true market is going. It just had people, just cashing out some profits. It caused a 10% dip, 15% at the most for some, and then things are kind of getting back on track again. Just
some people can't even imagine like 150K Bitcoin.
Yes, it's hard to see it right now, but we're getting pretty close to it, especially with the ETFs and everything going on. We're getting pretty close to it. But moving on to our stocks here, we got the greed and fear index on the stock market at 76 right now, and still kind of touching that 40K range on the Dow, over 52K on the S&P, and we are at 16K 476 on the NASDAQ. So it's still in extreme greed and euphoria, which kind of means we're about to have a correction in stocks eventually. But also keep in mind, a lot of the stock pool has been led by a few key companies in the tech sector, mainly AI and NVIDIA. NVIDIA just is like the gift that just keeps on giving right now. Let me pull that one up because it's now.
It's like I see this.
No, go ahead, Cody.
It's like I see the stock market and crypto doing well, but at the same time, it's so easy to fall into a habit of doom scrolling like I was doing, just
Hmm.
seeing like this morning I sent it to Sal, 50,000 Americans died from suicide in 2023, and it was on Reddit and other forums, and I read all the comments, and literally 90% of the comments said that it was due to being priced out and how rough the economy is, and the other 10% said it was because of how society treats one another. So I mean, it's like I don't know. It's easy to fall into that, but at the end of the day, life is good. The economy, it is gonna better up. Nvidia, like we're looking at it right now, it's the talk of the town right now. But will it? It's kind of like Solana. Will it sustain that?
Yes, and the big thing about Nvidia is like, did you hear about that guy? Everything, he's a YouTuber. Everything Money. He put in
Yeah.
a ridiculous short and lost $5 million on this short, and he closed it out. If he had kept going, he could have lost close to 50, 60 million on this short if he had gotten to this range. Like, this is absolutely insane, guys. Don't ever try to short a stock off of just off of basic information, because
Like, oh, it's hyped up. It'll go back down.
yes, like this wasn't really hype. Me personally, I still think the stock is overvalued for what it is right now. However, the company itself is a good company and sustainable. So I just think we're overvaluing it, but the
So, do
market is
you
telling
see Nvidia as a long-term hold for something to put in like your Roth IRA or something like that? Do
yes.
you see Nvidia as something that's going to be in the top Fortune 500 one day and that will pay off well in a retirement portfolio?
Yes, especially their work around AI and robotics. I mean, they're probably like, remember when we were talking about the iRobot movie? And we were talking
Yeah.
about how those jobs would be like delivery jobs would be taken over by robots. Well, this is like one of those companies that has the potential to bring that. Not necessarily, I'm not saying it's going to happen in 2 years, but when you're talking 20, 30 years down the road, this is a company that's going to bring it. They've been doing very well. They're integrated into a lot of aspects of what the future needs of businesses are. They are going to grow. However, I would not like throw like your entire nest egg into it right now. It's just way too high value.
No.
I would wait for
Nvidia,
progression and then get in.
I even feel the emotions. It's not even FOMO. Don't say it's FOMO because I'm all in on crypto. Like I'm not even a big stock guy, but I'm even itching to get to DCA into Nvidia. Not for the next 5 years. I don't care about what Nvidia is gonna do in the next 5 years. I see kind of like, and I already have a plan of what I want to do after this big crypto bull run. The two assets I'm gonna be buying: Bitcoin and Nvidia. I just feel like buying Bitcoin and buying Nvidia are the two like biggest long-term plays. That's just my opinion. You might disagree, but Bitcoin on the crypto side and Nvidia on the stock side, I think you can't go wrong.
Exactly. I mean, you look at this chart, right? Look at it where it was. We're talking over 20 years ago. Just look at the price. We're talking under a dollar, few dollars, back and forth, back and forth, back. We get up a little bit, and then look, it starts going back down from the 2008 crash, kind of goes back up. Technology starts getting better right around 2015. And then all of a sudden, you see where it starts to spike. Like this spike was in the making well before COVID. So, like, there's a lot of people out there saying this is a COVID stock. It's not really a COVID stock, it's been around for a while. And it just happens that during COVID, which is ironically, was the best time for engineers and people who work on projects that this company is involved with, because they're kind of more, I like to work by myself, and COVID kind of helped that because they were able to work by themselves and really innovate what they were doing. And now they're becoming such an integral part of bigger companies and offering services and products to other smaller companies. It's just starting to grow. So
Do you think
where they're going is just ridiculous. I'm sorry, go ahead.
do you think This is one of those long-term plays to where, let's say you invest. I'm just asking what you think. Like you, because I kind of see it as that. Like, let's say you invest $10,000 a year into Nvidia, and you hold it over 10 years. Your investment equity will be sitting at $100,000. But I wonder what the profit would be.
Well,
I bet it would be a lot.
let's put it to you this way: if you invested in Nvidia 10 years ago, right? If you invested 10 years ago, so that would put you right around here, right? Let's just go right here, April 1st, 2014, right? That puts you at I'm sorry, that puts you at $4.62, right? So let's just say you put $10,000 in at $4.62, right? Divided by $4.62. So that means you had 2,164 shares, right? So I'm going to times that by 922.21, which is what it is right now. That means your $10,000 investment is $1,996 and 100 I'm sorry, $1,996,125 and some
It's
change.
crazy.
So
Crazy.
that was a $10,000 investment back in 2014. And this is the type of thing that you guys got to understand. Like, there is more potential for gains really in the long term. It just takes a long time in stocks than there is in crypto. But if you get your money in crypto, you should pull it out, start putting it into stocks and real estate, and really get yourself a financial advisor, because these are the type of gains that you really are missing out on. And once a company really starts making that value present, then you're able to earn some of those profits. So you can imagine, what if you had $1 million portfolio and you put $100,000 in? You know, this is why they say the saying the rich get richer, but the rich get richer through stocks like this, off of companies they become very proficient at running. That's how they get rich. That's how you make money. Now, your capital gains on this is going to be astronomical when you pay it. So just remember, you still got to pay your taxes on it. But Nvidia has quite a lot of stuff, and this article just released. I mean, this is literally 3 minutes old article, right? Talking about how their software is as crucial as the chips they make. And I can't see, it's great. It's probably a good read just to read it. I'm not subscribed, so I don't get the full article, but I can only imagine, if you have
I'm
people
starting to
talking.
like Nvidia.
Exactly, if you have people talking about your software and your products are so vital, your value is gonna just skyrocket. But right now is not a good
I'm
time. It's kind
seeing
of coming at the top of the market.
I'm seeing that I'm seeing that people predict Nvidia in 5 years to hit a $4.2 trillion market cap.
And it probably can, but what's going to happen is, guys, is we're going to see a stock split in this. I don't know what they'll do, but you will definitely see a stock split. I would say a 7-to-1 or a 10-to-1 stock split, and it'll bring it back down. And what they'll do is the value will go down a little bit, and then they'll start buying back the stock over the period of 10 years after their stock split. So if that happens, you'll probably be set up, because this company will probably re-reach this valuation again. But with that saying, right now it's at the top of the market. It's doing very well. The company is very profitable, but it's just overvalued right now. And what's going to happen is it's going to correct eventually. And when this corrects, it's going to correct hard. And then it'll start to stabilize, and it'll start going back up again with it. But I'm also interested to see, how this technology is going to affect Web3. Are they going to get involved in Web3? Are they going to do a lot of other unique things pertaining to AI and things like that? That's the stuff that I really want to see where
I
NVIDIA
think
is
we need
going.
Web3. I think as a transition for everything for our technology and our internet. I think we need Web3. I think it's just inevitable. We need it.
Exactly, and it's eventually going to get there. It will eventually get there. It's just a matter of time before
You know how much value you can
innovation
make
happens.
off of Web3? Like, not even just talking about profits or like any capital gains or anything like that. I mean, like creating value as in tokenizing like real world assets like vehicles, like real estate, like watches, luxury watches, Rolexes. Like, that would be, it gives your real world assets more value when you can actually store them on something like a blockchain. It gives it way more value. That's why we need it.
Exactly, and I kind of want to move over to talk a little bit about Arbitrum. We've been talking about it for a little bit here, but it's definitely got some potential. I just want to talk about the news because, as you know, we go over stuff live with you, so I don't really read these articles for you guys. But
It could
this,
do well, but my thing about Arbitrum,
no, go ahead, buddy.
my thing about Arbitrum is the token dilution, like the how much unlock, because there's like 1.7 billion circulating and there's like 12 billion locked up. So over the next year, we're probably going to see like over a 10-15% dilution and value on Arbitrum. That's the only reason that stops me from buying it. Love Arbitrum, love what they're doing. I hate their tokenomics.
Yes, and slashing the gas fees doesn't help with the burning of the token. So there's going to be a little bit more in circulation here. I'm not sure if this is going to
I
be
just
good.
don't think it'll be the hot layer two after the bull run.
Maybe not, but it will get pumped up by the bull run, along with
Yes.
ad shares. Oops, I
Ad
gotta.
shares is still a good one. What's his name? Alex Becker. Alex Becker is into ad shares. That's who I found it from.
Hmm. So I do like the fact that I think crypto gaming, and especially now with people feeling tightened up by the economy, they're gonna look for these play to earn type games again. So I have a feeling that AdShare will be a good crypto to have and a good ecosystem to have as they're maintaining ads all over those play to earn games. Especially if we still hear Rockstar and GTA 6 talking about doing a play to earn. So they're not fully out or not fully in yet. So they're kind of in limbo with that with the new GTA 6 game, and that's going to, if that does do play to earn, it will propel the market. But either way, with the economy tightening, people trying to find alternative solutions for filling the revenue gap in their household incomes, play to earn is going to come back like it did in 2020 when the lockdowns happened and things kind of went a little haywire with people's incomes in the beginning, so they started doing play to earn. So, but irregardless, I still think ad shares is a good place to go just to keep an eye out. It's down, but I have a feeling it's going to return hard during the bull run, especially when people just start flooding the market with money. Because right now, I mean, if you go back a year ago, I think I can look back. Yeah. So if you look back like just a year ago, I mean, here we were on the market cap, just over a trillion, and we've more than doubled in value in the last basically 6 months. So kind of a nice rally, but that isn't the bull run. We're going to see, it's more of a relief rally or like a hopeful rally. Got a lot of hopium in that rally as people are just starting to throw money in there because, and you know what, I think people don't give retail investors enough credit. I mean, I think a lot look looked at looked at what happened the last 4 years and are just trying to time that bull run. And that's why we had this nice pump up, along with, of course, the ETFs and everything getting involved, because we've had no news, no negative or positive news. But we did have a little bit of news about Biden's stock market, the crypto taxes. Let me see if I can pull that up. Oh, yeah, that's Cody. Cody, I think you're trying to talk and your mic is a little messed up. Let me see here. Okay. I'll keep it low there for you guys. So as you see, we do it live. Sometimes we run into these problems. But let me see here. I'll put it there. Uh let me see if I could pull it up on here. That's not really one. But I might not be able to find the right article for you guys. But what happened was, and I got this from one of the posts, crypto, one of our great supporters, Crypto Dream shared, was it was about taxing your crypto earnings before you physically sold and made your earnings. So that could potentially run into a problem with crypto in the United States. So in the essence, if you bought Bitcoin at 40,000 and it's now valued at 70, but you haven't sold at 70, you're still holding it, then you would have to pay the difference during that year. So from January 1st to December 31st, whatever the difference in values at that time, you will have to pay taxes on it. Now, that could cause a different cycle to happen. So that means basically every January, people would be selling off their crypto and then rebuying it, and we'd have rapid crashes. But it could also work in reverse if there's a bear market, because if Bitcoin goes from 70 to 14, then you're going to have to start marking down losses, and the government's going to have to pay you money. So or write off money against your already existing taxes. So I don't know how that's going to play. Cody, did you manage to fix your mic there? Um,
Yeah, but I'm taking a bath and just listening.
oh, okay, no worries. Um, uh, so we are so that taxes definitely has some disadvantages, and I wonder why they're not doing that same for stocks, because there's a lot of stocks that just keep going up. If you look every year over year, they go up until the price corrects. But they're doing it on crypto, which crypto you can hit it, but also at the same time it could swing the other way. It's kind of like a metronome. It's on double time. It's just going tick tock, tick tock, tick tock. So you're going from gain to loss, gain to loss, gain to loss. I don't see how they could tax it that way, because you might make money during a bull market, but bull markets are so short with crypto that for 3 years you're going to be giving back money. I don't think it's going to work out. I hope someone sees it and says, "Hey, this ain't going to work out well for us," but you never know. And of course, what will happen is people will game and change the try to game the system, and I don't blame them. But let me go ahead and pull up this stock. I know we're kind of bouncing back and forth, but let me pull up this stock here, Dollar General, because I kind of want to show its run. It's kind of in, compared to where it was for the last 3 years, it's kind of in the pooper, but it is rebounding slowly, and a lot of it is because they're filling out the needs in America where there are food deserts. And they've also come out with their superstore, or like market store. So it's a Dollar General market. So it's more than just a dollar store. they're offering more fruits, vegetables, meats, things like more like a grocery store type thing. I think this is a good play for them instead of just going with the standard dollar store because that's what Family Dollar and Dollar Tree did. They just stayed as a dollar store. So knickknacks, party toys, stuff like a cheap stuff, right? Just stuff, snacks, things like that. It's just stuff as a dollar store. Instead, Dollar General said, you know what? Let's be more than just a dollar store. Let's add maybe some like fresh fruits, fresh vegetables, cheaper more affordable products, meats and food stuff that we could sell. And what I think is going to happen is they're going to start filling the areas where Walmart has exited, and they're going to make a fortune in these small towns. And their model is a three-person crew. Believe it or not, they run off of a three-person crew. Like, or some doctors might have like five people, but they don't have a warehouse guy. They have a couple associates, assistant manager, and a general manager. So there might be four, most likely three. So like if you go off to one that's like in a town that has like 3,000 people, they only have three people working. But if it's in a big town, I can see that it has like five people. But their labor costs are very, very low. Their cost of goods is very, very low. Their small square footage is allowing them not to have the same utility bills as Walmart and a lot of these big box stores or big grocery stores like Harps and Whole Foods and things like that. So they have a good advantage of getting in to where all those people are exiting or where grocery stores are closing, setting up a smaller shop and getting more becoming more modern and then offering more staples, foodstuffs, more things that people want. So as you can see here, right now it does pay a dividend per year, 59 cents per share. So that's pretty good. Earnings per share, $7.55. I mean, I don't know if we can really pull up the financials on. Oh yeah, we can. Sometimes you can with Market Watch. Sometimes you can't. Um, well, if you're looking, revenue, we went from 2019 from 25 billion, roughly almost 26 billion, to just shy of 38 billion. So cost of goods sold. Now this is where things started rising. So, but as you can see here, 2019 was 17 billion, 19 billion, but then you got 2021, 23. Part of that's inflation, but part of that also is they were expanding and offering more lines of selection for their products in their stores. So they're naturally going to increase as the revenue increases. My thing is how much of this compared to this, the percentage is its revenue. But if you look at the growth, growth, kind of stagnant, but growth. But the good thing about them being stagnant is they went up a little bit in revenue, but only went up a very little bit in their cost of goods sold. If you go down here, we can't really see these, but you look at their profit margin here, 31% before other expenses. That's pretty good. I'd say that's
Did you hear
pretty
about?
good. I'm sorry. Go ahead, Cody.
Did you hear about new BlackRock's new fund on Ethereum?
No, I haven't. We can talk about that in just a second. Let me get through Dollar General real quick here. So, looking at everything looks pretty good, except probably they're not probably doing too well in the foreign markets, but they're probably doing well. And foreign, they probably are only in either Mexico or Canada. Um, let's see here. Yeah, other than that, 10%. That's what you can hope for. A 10% EBITDA margin. So that's pretty damn good. So it's looking like Dollar General's going to be a good staple to have as the economy goes down. Might even be a better pick than Walmart, to be frank, because usually Walmart fills this role, but it seems like Dollar General is is taking the lead on this one, and it's outperforming its competitors too. Basically all dollar stores. That's mainly because they're offering more food and they're offering a little bit better of a quality of food to their customers. But let's go take a look at what Cody said. The new BlackRock Ethereum ETF.
I'll send the link, or never mind, you got.
No, I don't. I don't have a link. I was just gonna look for it. Let me see here.
It's about real world assets and tokenization. BlackRock has a new fund for that on Ethereum.
Oh, here it is. Wall Street Journal. All right. Well, I don't know if we'll be able to. Oh, I think I gotta sign in. Let me just sign in here. Huh. For some reason, I'm signed in, but okay, it's not letting me see it. Okay, well, but it is definitely interesting. Let me see here. CoinDesk. Okay, that one's free. We can go to that one. Let's just see here. Come on, CoinDesk. Load up for me. Let's just close down some of these windows so we can. There we go. All right. Let's share this. Okay, here we go. BlackRock enters asset tokenization race with new fund on Ethereum network. Let's hear unveils tokenized fund yesterday on Wednesday. Representatives Securitize will act as a transfer agent and tokenized platform, while BNY Mellon is the custodian of the fund's assets. BlackRock said Anchorage Digital Bank, BitGo, Coinbase, Fireblocks also participate in the fund's ecosystem. Definitely good for Coinbase. It's definitely good news for Coinbase. Actually, I kind of wonder where Coinbase has reacted. How has Coinbase fared with this news? Yeah, and they did everything right. So they filed regulatory and has grown to 730 million from 100 million in early. Okay, so they're growing their crypto holdings and everything. To be honest, I think it is because they looked at what Quant was doing, and they figured out, okay, there's some money to be made here, so they're coming into it. Will they succeed with this? Will it work? I have no idea. But tokenization of real world assets basically cuts out a lot of middleman companies. So like if you're tokenizing real estate, you get rid of the title companies because you don't need them anymore. Because now you can just transfer the token on the blockchain as the representation of the ownership. But it's also kind of funny because not a lot of older people realize this, but tokenization of real world assets might get rid of all the title schemes out there and scams. So there was one YouTuber, I don't remember his name, but he was explaining how he had 50 rental properties and he basically had them stolen out from under him. And it was a big ordeal. It took years to resolve. And what the person did was found a back door in the software of the title office of the county, got all his properties, put his name on the title of all the properties and for his rental properties, and then started trying to sell them off and then collect the rent payments off of them and bypassing the property management company. So it was a pretty big ordeal, and that's kind of hard to fight because, like a lot of people know, like the sheriff's office and police, don't really know how to handle white collar crimes. So you kind of have to take it up with the FBI, and your loss might not be big enough for them to really look into it. But if you tokenize it and it's on a blockchain and the blockchain is registered by tens of thousands of validators, it's going to be very hard for you to go in and say, hey, I really own this property and put your name on the title. It'd be very hard because you'd have to get all the validators to say, oh, there is a mistake. Okay, we'll correct it, which most of them will say, well, that's tough luck. It stays the same. I mean, not to say that scammers will find a way to scam, but that would put a huge dent in squatters and title scamming and people who do title scams, because now it's tokenized and it's on the blockchain's ledger. So, and the blockchain's not going to get reversed. So you're kind of just have to kind of deal with it. You know what I'm saying? It's just something you just have to do. Just have to deal with. As far as BlackRock entering into it, they have the money to really outlast anybody. I don't think they fully understand what they're getting involved with. They just try to get in because there's money to be had, and that's all they're looking to do. But they might succeed on it. But with this, with Coinbase being a part of this, let's take a look at Coinbase. See how they fared. Yeah, they're up 5% on the news. That's pretty good. Like you see here, Tuesday they took a little correction. Wednesday the news launched, and here they are back. Yeah, that's like a $70 increase right there, right? Yep. You look here, 230 shot up to yeah, $40 increase. So they fared well with that announcement. But I don't know how well it's going to affect everything. That would be something to really take a look into. Is that how's it going to affect the markets? How is it going to change anything really going forward? But it's definitely something to keep an eye out on for you guys. And if you're watching Coinbase, it's also another one I think is going to correct, because if you look in a year for Coinbase, I mean, it's pretty high from where it was. You might see a correction in it. But then I could be wrong. This could be just the new market phase where it's just gonna go keep rising. So don't know. It seems like we should have a big correction, but we're not having the correction that we should be having. It's just interesting. So, but with that, there really isn't much more going on. And the last thing really I want to talk about today is just the real estate area, because the real estate markets are changing with buyers having to pay the commission, but now the commission went from 6% to 2%. So how's that going to fare for the housing season, which is usually April, May, June, July, August, and September. So you got solid 6 months of the year, which is the busy season for residential construction, home sales, real estate agents, moving companies, logistics companies, furniture stores. It's definitely going to change. Now, it is going to put into more money into the pockets of the seller and the buyer, and the buyer doesn't have to front up more money on the loan, and the seller gets to keep more of the sale. So now what's going to happen to all those people who entered into real estate thinking they were going to make $100,000 a month? I mean, realistically, if you're talking 60,000 off of $1 million home, and most homes are getting close to $1 million right now, that means you're making, I think it's 60,000. You got to give 20,000 away to basically all the expenses and your brokerage firm and everything. So that means the agent's making 40,000, and you just sell a home a month, you're at $480,000 as a primary broker. Like that is insane. That's insane. But now you're talking instead of the 60,000, they have 12,000 to share, which means they're probably end up on $1 million house, probably not making as much. You're probably I think probably it's more like 16,000. If we really want to be 16,000 minus probably the percentage base, 5,000, then you gotta split it or divide by two. So you're looking at 5,500 off of a sale, which is still respectable. I mean, that's $60,000, but you ain't making 400, $800,000 a year. I mean, there were some brokers, even in reasonably like regular areas, not like New York City or Miami or Los Angeles, but they're just in regular areas and regular towns making $1 million a year because all the value skyrocketed. The payout from that settlement is not going to work. It's not going to really hurt them, but the regulation changes and how much real estate agents get paid will hurt. Then you throw in on top of that's how Zillow was making a crap ton of their money. They would take a percentage of that closing of your commission. Well, now instead of maybe getting like 4 or 5 or 6,000 off of that close, Zillow might only get like a couple $100. I mean, it would be like if you had a cleaning company and every lead that you got from that lead source, they were taking 25% of your profit instead. And when you made a contract of $1 million, instead of them getting 60,000, or taking a 20% of your commission, it's like you only give them like 10, $15. So I think Zillow might bite the dust. Homes.com will probably last, but Zillow, that's how they were making a lot of their revenue. I think Zillow might not make it through this transition. Which means they're going to have to either find other ways to make money off their platform, which means they're going to start charging people to put their houses on, or they're going to start charging a membership fee for people to visit the site to check out homes. That's going to be interesting because I don't know if anyone really wants to pay like a yearly membership to check out Zillow. Like you only use Zillow when you're really looking for properties or you're just kind of curious. But that would disappear. So I wouldn't even pay like $5 a month for that, unless if I was working in the industry or I was buying homes that much. Like you'd only pay it for the month and then cancel the subscription. But let's check out Zillow real quick here. So, yeah, let's just take a look over the last 3 years. As you see here, right around 2022 is when everything went to courts and they went from their all-time high all the way down into the pooper. And it's just been kind of stagnant there. And it looks like they're probably going to suffer some more on it. So we'll have to see. We'll have to see what plans they have. I don't even think they're even talking about it in their news. Yeah, Zillow stock fell on the NAR settlement by the dip. City says I wouldn't buy Zillow right now. Yeah, no more 6%. Oh yeah, home buyers and sellers will soon negotiate their own commissions with agents. Oh my goodness, I didn't even see that part. I thought it was just no more than two, like it was going to be set to 2%. No, you're going to be negotiating. There's going to be people that negotiate like 0.5%, which is true. It's like, why should I give you 2% of my home sale or even 6% of my home sale if I'm the one that has to maintain the credit, get the loan, pay the loan off, maintain the property, do all this stuff. No. And all you're really doing is putting it on a site like Zillow or Homes.com and waiting for someone to give you an offer. Now, if it was a real estate agent that had a lot of network, didn't post your stuff, and just pulled someone out of the ether and they bought your home, that person probably deserves 6% because they've already set up a network that you are taking advantage of. But a lot of real estate agents, 99% of them are not like that. Most of them don't even care to network enough to get handyman, inspection people, movers, cleaners, or anything like that. So, and those are going to be the real estate agents that give up and quit because they don't want to negotiate. They just want you to let them post the home, sell the home, and walk away and not really care about any of your concerns or anything. So it's definitely going to be pretty interesting as we get as we get into the summer, because I just can't see how they're going to how 99% of these people who don't network as real estate agents are going to survive this transition. Because this means if you really want to earn the commission you think you deserve, you're really going to have to bring a lot to the table to offer the person selling the house. Because I don't think real estate agents think in the way that I'm thinking, in that you're trying to convince someone that's maintaining a home, paying all the bills, paying the mortgage, doing all the work, to for you to take 6% of the value of all that hard work for just posting it on the internet. Like, that's all they do. I could see value being given, like I said, if they came with like, oh, I got the inspector, I got the handyman, I got the fence people, I got the yard people, I got the movers, I got the cleaners, I got everybody you need all under one roof. Come with me and we'll get you taken care of. And we'll sell your house right away. Oh, by the way, I already have a potential buyer. They're coming in the next couple hours. Do you think you can, leave the house for a little bit? Like that's the real estate agent that you really want. Those are very far in between. So I definitely see a lot of those people are going to be coming into the unemployment market and going to other jobs and doing things. A lot of the real estate agents that didn't make, because remember, the average real estate agent across the nation was only making about $24,000 a year. So that means they're only selling one or two houses, especially at the former rates were 6%. But this is another one of the great things. With change, the power is going back to the people. So you could say, I'm not paying you shit. You're only getting 0.5%. So now it's no longer like a title issue with this. What a lot of people don't realize, it's not a title issue. It now goes to being a civil issue. So now that real estate agent, if the buyer or seller says, I'm not paying you a commission, what's going to happen is that you can't say the deal's done. They still can close on their house and do everything. You now have to go to civil court, which I think is pretty interesting. And I really want to see how this summer is going to affect the real estate market, because it's looking like this is going to be a pretty busy summer with people buying and selling houses. I just got my gut feeling says it is.
Aiden might get some volume too.
Yes. But it's also got to remember, Aiden's got now he's not got to fight for his commission. And there's a difference between saying, hey, I'm a real estate agent, these are my services, this is what I cost. Now you got to say, these are my services, this is what I can do for you. I'm charging 3%. And the other person can say, well, I don't feel like giving you 3%. I want to give 0.5%. I can tell you right now, a lot of, especially olders, the boomers, oh, they're going to go crazy with this. People calling them the baby boomer generation. They're going to go crazy with this because they're going to be like 6%. Screw you. Get half or kick rocks. And there's nothing you can do, because if they got the $1.5 million house, you kind of want that commission. So I know a lot of people give up, and a lot of real estate agents will cave in and take the 0.5%. Now, 0.5% off of $1 a $1.5 million home, oops, times 0.05, I mean, you're walking away with $75,000. I mean, come on now. You know what I'm saying? But, brokers also have their agent fees and everything. But before this, you were looking at 6%. So, or I'm sorry, I'm not doing this right. Hold on 1 second. I'm sorry, it's not 75,000. 0.005. Oops. Times 0.005. My bad. I've been bad at math today. So you're looking at 7,500, right? That is pretty good. That's still pretty good. Like if I could sell $1 million house once a week, I mean, you're making 7,500 a week, right? I mean, it would suck in the beginning as you adapt, but once you get the cycle going, eventually, yeah, you will be making a ton of money. But under the current system, these people are making 6%, which is $90,000 of the sale, which is crazy. That's like I give you cash, and because it's like saying you go into the bank, I want to withdraw $1.5 million, and the teller, because they processed your transaction, wants to get paid $90,000 for giving you 1.5 million of your own money. I can see a lot of baby boomers thinking like this. I can see a lot of Gen Xers thinking like this. I can see a lot of people just thinking like this and saying, no, why would I give you this much? You should be happy, because they're going to think, well, 7,500, that's a lot. That's one of my paychecks. You should be happy with that. Aren't you selling a home a week? That's how the consumer, the buyer, or the seller is going to think about real estate agents. So, like, there's kind of like a target on them right now, and I really want to know how they're going to fare. Now, I'm just giving random numbers, but just kind of going over the scenario. So it's like you can see the power of the people. Now, keeping 90,000 of the sale of your home is pretty good. Like, if you didn't have to give up $40,000 of your home, which you worked hard to get the mortgage, pay it on time, maintenance the home, keep it updated so that way you can sell it at the high value. And here comes this person, and all they did was do some texting, sold it, didn't really answer your questions, didn't really work for you, didn't offer any services beyond that. And now they say, oh, by the way, I'm going to take 6%. It's like, wait, what? It's like, it's just kind of a wait, what moment, So that's definitely pretty interesting and big. That might happen. And Aiden's young and ambitious, so I have a feeling he will overcome this, but 99% of them won't overcome it. I can guarantee you, which will make more money for the people who stay. So, but that's kind of all we got on the market today. That's kind of all the news right now. Really nothing else. Got a little bit of time. I'm gonna drop the link in here if you guys want to join in. The link is in the chat on YouTube, Facebook, and what's that? Twitch. It's in the chat on Twitch. But we appreciate you guys. We have a decent amount of people in here. We even got quite a few people on Twitter. So definitely shout out to the folks on Twitter watching us. If you guys can give us a like and subscribe or a follow on Twitter, it'd really help. So I don't really have any other final thoughts other than this is probably gonna be a crazy summer. We're not going to see a pullback just yet. We're not going to see a correction just yet. If anything, you're going to see values go higher. You're going to see home prices go higher. Mortgages are going to stay about the same. If anything, they might decrease the interest going on right now. We'll have to see what the Fed is doing. We'll have to see how inflation's going. We'll have to see what their decision on interest rates are going. But I do have to say, there are still businesses out there still laying off. I think what was it? Bumble laid off a third of its staff. Bumble laid off a third. You got a lot of tech companies, online companies, internet-based companies starting to lay off quite a few people. So, if they're doing more layoffs than normal, then we're probably going to see more houses than normal get put on the market, and that might help maintain or suppress the price increases over the summer, because that probably be the time most people, if you lost your job, let's sell the house. Let's try not to keep it, sell the house and move on with our lives. And that's what people might do. With that said, I have nothing really else to say. I'm really happy that you guys are in here. Definitely enjoyed definitely enjoyed this stream. I hope you did too. If you can go on YouTube, give us a subscribe. We're trying to grow and build over there too, so really help us out. But thank you guys so much. Stay safe out there. Remember, don't moonshot your life savings into one investment. Always do your own research and due diligence, and make sure you understand what you're investing in. Well, with that said, guys, I'm checking out and I got to get back to work. Thank you guys so much. We will see you guys next time. Might not have a live tomorrow. We'll see. Thank you guys, and I'll talk to you guys later. Have a wonderful day.